Hey guys, it's Jason Postel, JP Capital Solutions here. Just wanted to go over a little article here. I know this is probably a touchy time for a lot of people that are in the stock, so I won't bring too much light to that. But I did want to do a comparison, between stock market versus real estate investments because there are many folks that just don't know real estate like many that don't know stock market. Just like there's many people in real estate that don't really understand it, with the people in the stock market that have no idea where their money's going whatsoever. I don't personally get into the stock market. I myself personally, love real estate because it is a hard asset. I know it's going to be there. It's just not going to poof be gone one day. With that being said, there are can be some ups and downs, but the cash flow from, let's say, apartment buildings usually is less risky than, let's say, a big box store like Macy's or Toys R Us, and we've seen what happened with a few others. But anyhow, I just want to go over this article really quick. Just again to kind of maybe shed light more on real estate and how it is a safer asset class than in certain times than others, because I personally my whole life have been interested in real estate, and I was fortunate enough to learn earlier on than later about real estate opposed to stocks and CDs and some other things that I've seen family and other close friends have good and bad experiences with. But just to give you an idea, because people always just want to know returns, right? Like I want to know how much my bills to cover the, let's say it's 50 grand a year, right? So how much, and guys, this article, if you go to www.jpcapitalsolutions.com/blog, you can see this on how to earn 50,000 a year in dividends, and it basically just compares an Apple stock, for example. So if you have let's say some stock in Apple, but you want to have $50,000 a year in dividends, okay, that would require, with the yield right now, the 0.017, that's the average dividend yield offered by an Apple stock. It might be like 1.6, actually, a little closer average currently right now. You would have to have 2.9 million of Apple stock to receive $50,000 annually in dividends. Okay. Now, here at JP Capital Solutions, credit investors, if they would like to receive that same 50,000, we offer preferred rates of return at 8%. So you simply figure out how much you would need by dividing the $50,000 you'd like by the rate of return on any investment, guys. So that is $50,000 divided by 8%. Our pref is $625,000, guys. But in real estate, as you guys know, some of you may not, but you're really leveraging. You get 3 times the amount. Okay, so you got 625. You can leverage that into 1.875, right? Because of leverage. So moving along, it does keep getting better because your initial investment, let's say, is 625. Let's just at the 8%, let's say, and that's not even factoring in other splits. After, we shoot for 17%. Okay, internal rate of return. We can go on to that later, but that's not what this is about. But just keep in mind that $625,000 initial investment cash flows at the 8%, and it will have paid you $500,000 in 10 years, and you still have your capital investment. Okay, that's huge. All right, keep in mind, let's go down to 2049. All right, now what you have paid, the 1.87, that's gone up 3, 5, 10 times, and you'd earn 1.5 in dividends on your initial 625 that you still have. All right, and guys, I know this is a lot at you. I'm happy to answer any questions. If you go to our website here, you can learn a little bit more. Put in the comments or just reach out directly, guys. I'm happy to help however I can. All right, and I'll look forward to hearing from you guys and look forward to seeing you.